Michael Burry just made the biggest bet of his life. He's betting $1.1 billion against Palantir and Nvidia, the two companies that are leading AI. He's essentially betting against the entire AI industry. Michael Burry famously timed the market in 2008 and made hundreds of millions of dollars. They even made a movie about him. If he's right this time, he could be making billions of dollars, far more than he ever made from the 2008 financial crash. Over the last few years, Palantir's stock price have increased by more than 2,000%. It has been one of the best performing stocks alongside Nvidia. But it seems like investors have reached to a point where they believe that maybe these stocks are a bit overvalued. The CEO of Palantir tried to defend Palantir's stock price, but his arguments were very weak. These stock prices are not backed by real earnings, so if early investors start pulling out, it all could come down crushing like a domino effect. So, is AI bubble is about to burst? Michael Burry purchased put options against Palantir and Nvidia, 5 million shares for Palantir and 1 million shares against Nvidia. That's about $1.1 billion. A put option is basically the right to sell the stock at a specific price sometime in the future. So if the price of the stock, for example, is $100 and I buy a put option to sell it at $100, then the stock crashes to $80. Now I have the right to sell it for $100. So I'm going to go and buy the stock for $80 because I have a buyer to buy it for $100 because I've actually got put options. And that's basically how Michael Burry is betting against the entire market. In 2023, a single Palantir stock was less than $8. Today, it's about $200. The price of the stock slightly dropped after that, but it's still around $190. But you can clearly see that rise has been dramatic over the last couple of years. So the real question is not, why is Michael Burry betting against the entire industry? Does he think that the AI bubble is about to burst? The PE ratio of Palantir is 446, which means that investors are paying $446 for every dollar that Palantir is earning. That means that investors are expecting huge growth sometime in the future. They're overpaying for the price of the stock so much that they expect exponential growth in the foreseeable future. If that exponential growth does not happen, then yes, Palantir is overvalued. But the second most important question is when that growth is going to happen. Companies are not just judged by their products, but also by their revenue and profit. When you start a business, of course, the most important thing you have to think about is the product. And product is the essential part of any business. But you as an investor, when you're investing, you have to think of a company as a machine. You put money inside the machine and that machine should give you more money. If that's not happening, then it's a bad investment no matter how good that business is. It could be a perfect business. It could build really great products. But if it's not increasing their sales because it reached its peak, for example, then it's a bad business or a bad investment for you because you're putting money in, but it's not making more money, even if it's making the exact same amount of money. So you always have to keep in mind the price versus value, because anything can be valuable, but if it's overpriced, then you're actually making a very bad investment. Palantir's revenue and profits over the last few years have been actually rising dramatically with every single quarter. Q2 of 2025 have been with revenues at $1.1 billion and net income is $326 million. Q3 shows that revenue has grown slightly to $1.1 billion, which is actually insane, and profits have increased to $476 million. If we assume that Palantir's annual revenue based on their best quarter, which was the last quarter, it would be $4.7 billion and a net profit of $2 billion. Is that a lot? Yes, of course. But for Palantir to justify its current price, then it must have a net income of $20 billion, assuming that the company will have a net income ratio of 20%. And that means that they have to increase their revenue to $100 billion. The real question is that, can Palantir grow their revenue from less than $5 billion to as high as $100 billion? In my opinion, absolutely, because Palantir is driving AI and they have all the chances to make far more than $100 billion. But there is a second most important question. how long that will take Palantir to grow from $5 billion to $100 billion. And that's the question that investors are asking themselves. If it's going to happen in 100 years, most investors are not going to wait 100 years for their revenues to grow that much, because there are going to be far more opportunity costs in the market. Investors would want cash sometime. And some investors, or a lot of investors, I would say, are not simply going to live long enough to see the benefits of their investments. So how long it will take Palantir to make that much money? 5 years, 10 years, 15 years. If that's not going to happen anytime soon, then it's probably a bubble and it's going to burst. It is very normal for investors to overpay for a particular stock because they believe that the company is going to make a lot of money sometime in the future. But that sometime in the future should be sometime in the foreseeable future that investors can clearly see. If a lot of investors are pulling in money into some kind of a stock and its stock rises dramatically and it will take the company 50 years to justify its current price, then why would I buy this stock if its price will only be justified in 10 years from now? It makes no sense. The real danger is if earnings stops growing every single quarter because something is wrong with the economy, the industry is slowing down, the company is slowing down. So if the next report will show us that Palantir made as much money as they made in the last quarter, then investors will have the switch. It's like, well, maybe Palantir stopped growing. The CEO of Palantir, Alex Cobb, was on TV and he was like, you should not be betting against good businesses. You should be betting against bad businesses. But that's not how it works. And the 2008 financial crisis is a perfect example. House prices grew dramatically fast between 2000 and 2007, but they collapsed in 2008. The real question is that were all the houses that people have purchased in 2005, 6, 7, were these houses fake? They did not have any value? No, these houses were perfectly legitimate houses. But the problem is that banks began giving so many mortgages that people who could not afford these houses purchased these houses. And the price of those houses shouldn't have actually increased that fast in such a short period of time. They happened because of artificial demand and they weren't backed by a real demand, which is why the 2008 financial crisis happened. And then 5 years later, house prices completely recovered. In fact, they began to grow after that. And today, the average house price is more than $400,000, literally almost double the price that they were at the peak of 2007. So essentially, if you didn't actually sell your house in 2008 and 2009, you would actually still make a profit. If you take that logic and apply it to the AI, then you understand what exactly is happening. AI is legitimate. Companies such as Nvidia and Palantir are real businesses and are about to change the world. But the problem is that they're not making enough earnings today to justify their prices. At the same time, there are so much money that are chasing these companies. So investors have dumped so much money into these companies that these stock prices have risen so high, but they don't have enough time to actually justify those stock prices with real earnings. And if those real earnings are going to come 10 years from now, that's where the problem is. If these companies start to make a lot of earnings today and they can justify their prices in 2 years, for example, then it's great. It's not a problem. However, the US economy is falling into a recession, and that's where the real problem is. Because investors are looking at the market and they're like, the US economy is slowing down, unemployment is rising, inflation is rising. Maybe it's not just a recession. Maybe it's a stagflation. So if I want to prepare for this recession, maybe I have to sell some of my investments. And the first investments that you sell as a rational investor are the risky investments, such as Palantir. And then you're going to take that money and most likely going to dump it into safe havens, such as blue chip stocks if you're investing in the stock market, or US securities because they will provide you with a consistent returns. There is also a liquidity problem in the market. Liquidity is drying out, and if you as an investor, if you want real cash, then again you have to sell some of your stocks to have cash. You can be all rich that you want with stock prices, with valuations in the market, but if you want to take that money and turn it into cash, you might need to sell some of those stocks to turn it into cash to pay for your even daily expenses. And over the last few years, the Fed has shrunk the balance sheet from about $9 trillion to almost $6 trillion. And now the Fed is lowering interest rates. If it starts again quantitative easing, it is going to cause massive inflation. So the Fed is also in this strange position. On one side, liquidity is drying up and they don't want that to happen. On the other hand, they don't want to flood the market with cheap money and cause massive inflation, especially when inflation is not fixed yet. It gets even more insane when you look at these fake valuations. Nvidia is worth $5 trillion. And every single day that you hear that Nvidia investing more into OpenAI, Nvidia investing in AMD, Nvidia investing literally everywhere. But if you actually dig into those deals, you will find out that it is not the actual cash that is changing hands, but rather Nvidia is leasing its GPUs to those companies, and in exchange for that, it's taking equity in those companies. They don't have the money to buy them from Nvidia, but Nvidia is still ready to list them for an exchange for equity. And suddenly we have these huge valuations. If all of these were purely cash investments, then we wouldn't actually have a $5 trillion Nvidia valuation. And that's why a lot of people believe that AI is in a bubble right now. And this bubble is about to burst. And if it bursts, then Michael Burry has a $1.1 billion put options against two largest AI companies. Now, essentially, AI companies are three. OpenAI, that is leading AI, but it's a private company. Nvidia, that is supplying everybody with computer chips. And Oracle, which is literally the icon, you can call it, of AI. So with Michael Burry's bid against the two largest AI companies, he's actually looking to make hundreds of millions of dollars at least, if not billions of dollars. If he's going to succeed, they will make another movie about him. But if you want to profit out of this AI bubble, if you want to know what are the top stocks that you should be buying when the entire bubble is going to burst, if you want to know what are the stocks that you should be watching in order to maximize your profits during this bubble, then check out the first link in the description of this video. Thanks guys for watching, and I will see you in the next one.